Assalamu alaikum and welcome to our annual Zakah webinar. There's a lot to learn about Zakah, which is the obligatory charity owed by Muslims. And this presentation will provide a brief overview of who should pay Zakah, what types of property it's owed on, and how to calculate it on certain assets. We're also going to talk about some tax-smart ways to make your Zakah payments, and also how to evaluate charities and other recipients deserving of your Zakah. So let me remind everyone that this webinar is intended for educational purposes only. If you're looking for a fatwa or religious opinions, please speak with your imam. Now with that, let's get started. Today's speakers are on your screen now. I'm Fatima Iqbal. I've been in the financial industry for close to 2 decades and work as a certified financial planner. Many of you may know me as your resource for estate planning, tax planning, charitable planning, and asset allocation strategies. Bashar Qasim, our founder and CEO, will also be joining us today to answer any questions you might have at the end of the formal presentation. He is one of the leaders and foremost experts on halal investing in the United States. Bashar holds Certified Sharia Auditor and Advisor designation from the Accounting and Auditing Organization for Islamic Financial Institutions. Now, for those of you who may need a refresher, here's a little bit about who we are. Since 1997, Azad has been helping high-income professionals build their wealth in accordance with Islamic values. And today, we manage around $1.8 billion for individuals and families across the United States. What makes Azad unlike many other financial firms is the quality and nature of our advice. It's centered around you and your family, driven by a higher purpose and designed to give you peace of mind knowing your financial life is on track. Now, Azad follows halal investing guidelines from AOFI, which is the Accounting and Auditing Organization for Islamic Financial Institutions. The Zakah calculation guidelines in this presentation follow AOFI rules, and AOFI's comprehensive standards are based on a consensus by internationally renowned Islamic finance scholars from 8 schools of Islamic thought. So Zakah is obligatory on every living Muslim, regardless of gender, age, or mental status, who owns assets that meet the other conditions of Zakah. But if these certain conditions aren't met, then it does not remain compulsory. So let's take a look at what those conditions are that must be met before Zakah becomes obligatory. I'll list them and then we'll explain them in the next few slides. So the conditions are owning at least the minimum amount of nisab, or wealth, the lapse of 1 lunar year, the complete ownership of the asset by a particular person. There should be no other reason an asset is not zakatable, such as insolvency, and the asset must have some real or assumed growth. Now, first, the total amount of wealth owned by an individual must meet a minimum threshold. Now, that's what's called the nisab. The nisab relevant to us today can be determined either based on the nisab of silver or gold. This is equivalent to the current market value of 85 grams of gold or 595 grams of silver. Now, the value of 85 grams of gold in January this year was around $13,000. So, any Muslim who owns zakatable assets worth at least that amount and who has held those assets for 12 lunar months should pay zakah on those assets. Now for zakah, the nisab is around $1,300. So what happens when wealth reaches that minimum amount or the nisab? The next condition is that these assets should be held for a full lunar year, called the hawl, starting from the day it reaches the nisab. Now, zakah is not due on a particular day for everyone, but it should be paid once per lunar year. Many Muslims do choose to pay their zakah during Ramadan, again, for the additional blessings of giving during this month. And also it's an easy point to remember from year to year. But of course, you are not required to pay your zakah in Ramadan. Everyone can set their own hawl date based on when you've held zakatable assets for a minimum of 1 lunar year. Now, some people might choose to use the solar calendar, and in that case, if you choose to set a hawl date based on the solar calendar, the percentage or zakah is raised up to 2.577%, which is a little bit higher instead of 2.5%, because the solar calendar is a little bit longer than the lunar calendar. Now, by the way, there is no zakah owed on accounts that have incomplete ownership. So there are 5 factors that define what complete ownership means. Those are the settling, the ownership vesting, the accessibility by the owner, whether they're disposable by the owner, and having no interference by others. So let's take a look at how this applies to investment accounts. Now, before we discuss how to calculate zakah on stocks, we need to talk about the ownership of accounts that stocks can be in. For these accounts, we should refer to the conditions of zakah to see whether the owner has complete ownership. And of course, zakah is owed on those accounts with complete ownership on the amount that is owned after taxes and penalties. So let's take, for example, an individual who has an IRA, and they can access the money in the account, even though they might have to pay a penalty and taxes if they sold from the IRA and took a withdrawal before reaching retirement age. This fact actually does not prevent the IRA from being zakatable, but zakah would only be calculated on the amount that would be left after applicable taxes and penalties. On the other hand, an employee may not be able to withdraw from a 401k account at their current job if they're below the distribution age. Now, this 401k would not be zakatable until the employee either leaves that job or reaches the age when they're allowed to withdraw from the account. So if you're unsure whether you're enabled to withdraw money from your 401k, take a look at your plan provisions in your 401k summary plan description from your employer. And just to note, the third condition that must be met is that the assets must be completely owned and vested by a particular person or family. So assets owned by an organization or government are not zakatable. Complete ownership requires that assets be accessible and disposable by the owners without the interference of others. Owing taxes or penalties on an asset if you sold it, as I said before, does not nullify the fact that you own it. Now, this brings up another question that we receive related to ownership. And the question is, I am working and I have a 401k. I don't have cash outside my 401k. Do I owe zakah on my 401k that I can't withdraw? So again, in this case, the answer is no. Again, if you cannot withdraw from that 401k, that means that you do not have complete ownership and you are unable to access the account, and therefore this account is not zakatable to you. Now, assets that are zakatable are gold and silver, cash equivalents, assets intended for trade or sale, good current debt, livestock, crops, and minerals. Now, all cash, gold, and silver are liable for zakah at 2.5% based on their values on the day of the haul. Or again, remember, if you're using the solar calendar, adjust that to 2.577%. Now, there are certain assets on which zakah is not owed. Assets that are considered to be capital goods, like tools or factories, are not zakatable themselves. However, the income that is derived from them becomes zakatable upon meeting the conditions that we talked about before. Now, furthermore, personal use property is not zakatable, and this would include your personal residence, vehicles, clothing, and any other personal belongings. Also keep in mind that only halal and lawful assets are liable for zakah. So there is no zakah due on haram or unlawful assets like money that might be derived from interest or gambling, alcohol, pork, stolen money, bribe money, or again, any other kind of impure money. These assets or money actually should be returned to their lawful owners or again, donated to charity as purification. And finally, assets intended for retained ownership and for the purpose of deriving income are not zakatable. So this means that zakah is not owed on the current market value of investment property and income-oriented stocks. So for example, zakah is not paid on the market value of a rental property. But again, the income that is derived as rent and is held for 1 lunar year then becomes zakatable. In calculating zakah, we add all the zakatable assets minus any debts that are payable by the haul date to find the zakah base. So again, it's important to keep in mind that zakah is due on assets you have retained for 1 year and not on income or profits that have been retained less than 1 year. And again, on this subject, we do get a couple of specific questions about assets that are due for zakah. One of them often is about gold and silver used for personal use, like jewelry. And in this case, jewelry is zakatable, only considered zakatable only under the Hanafi madhab. But under all the other schools of thought, jewelry is considered a personal use item and therefore is not considered to be zakatable. Now, a person also has to be solvent, meaning that they must have assets greater than their current debts due in order for zakat to be due from them. So if a person has debt that is immediately due, that is greater than what they own, then they are not liable for zakat. So let's dive into this a little bit more. So let's take a look at zakat on debt owed to you and debt you owe to others. This also relates to modern financial assets since bonds are also a form of debt. But interest-based debt securities, including bonds, banknotes, CDs, commercial paper, money market, and others that are liquid, are liable for zakah only on the principal amount or market value, whichever is lower. Any gain that is due to the interest accrued or market appreciation is not recognized as lawful. And so remember, haram assets are not eligible for zakat. And again, those gains should be purified by donating to charity. On loans you make, you owe zakah on any amount that is repaid as of the hawl date if it's in good standing. But if the loan is past due and it's in bad standing, no zakah is owed until you recover the debt, and the zakah is then paid once for all the past years it was in bad standing. If you've taken a loan and owe debt, the amount due before the hawl date is deductible from your zakah base. But debt payments that are due after the hawl date are not deductible from the zakah base. So in this case, I think it's easy to take a look at an example. Let's say that you have a current home with a mortgage payment. You can deduct the current monthly balance due from your zakah base, but not the entire loan amount. Also, any interest from any debt acquired in a non-halal way should also not be deducted from the zakat base. If you have a debt that is a result of acquiring commercial assets, you can also subtract that from your zakat base. So again, if someone has assets of, let's say, $100,000, and they also have a debt of $100,000, but let's say only $1,000 is owed immediately, do they still pay zakah? And yes, they still pay zakah because their zakah base is their zakatable assets of $100,000 minus only the debt immediately owed, in this case, $1,000. So the entire debt of $1,000 is not then subtracted when finding the zakah base. As we discussed, zakah is obligatory on halal assets that have been held for one full lunar year after reaching the minimum amount of wealth. And this also includes cash. So most of us acquire money at different times throughout the year, such as from salary or gifts, and we may spend from it at different times as well. So one common question is, how do you calculate the zakah on cash? Do you have to track each and every deposit held for 1 year and then pay zakah on the 1-year anniversary of receiving it? As you can tell, this method would be very cumbersome. So an easier method is to pay zakah on all the cash you've held for 1 year since reaching the nisab. This will bring a greater reward, inshallah, and it's easier, it's more generous towards the poor and needy, and others who are also entitled to zakah. So for example, with this method, if 1 year ago you had $10,000 in your account, and the value dipped mid-year to $5,000, and now you have $15,000 in your account, with this method, you would pay zakah on the $15,000 you have in your account right now. So we have gone through who is liable for zakah and what assets and account types are zakatable. Let's talk now about the calculation of zakah on stocks. We'll use common stocks as an example since we get a lot of questions about them. And of course, our clients at Azad know that we calculate zakah for them on an annual basis and send a statement showing the total amount to be purified and paid from their portfolios. This calculation can be used for shares of publicly traded companies that you may acquire. And for purposes of this explanation, we are going to assume that the stocks follow halal investment guidelines, since again, zakah is not owed on shares of stocks that are not halal. Now, there are three basic intentions for purchasing a stock. Either it can be for trade, for income, or for appreciation. So for example, you may purchase a share, which you intend to trade and sell, or you may purchase a share for the dividend or the income that it's providing. And finally, you may purchase a share for its intrinsic growth or appreciation. And while a shareholder may reap the benefits of trade, appreciation, and income from a particular holding, the original intention of why it was purchased is key. So unlike taxes, we don't have the IRS looking over our shoulder, but zakah, of course, is a matter between ourselves and Allah. And so our intention and actions regarding our investment determines what calculation we should use. The zakah of a portfolio of stocks will be calculated by adding the zakah owed on stocks, again, purchased for these three different intentions: trade, income, and appreciation. And with this distinction, let's take a look at how we can calculate zakah on a portfolio of stocks. So, stocks held for the purpose of trade and appreciation are like assets that are held for the purpose of trading and are considered commercial goods, or in Arabic, arud tijara. Arud now means non-cash, and tijara refers simply to items intended for profitable trading. For these shares, the zakah base will be the total closing market value of shares owned, or the net asset value on the hawl date. And again, the net asset value is then multiplied by 2.5%. Pretty straightforward. Now, to give you an idea of how a zakah calculation on stocks intended for trade works, let's take a look at an example for an IRA account investing in a stock that has a market value of $50,000 on the hawl date. To calculate the zakah, we're going to have to account for a 10% penalty if the person is under age 59 and a half, and also their tax bracket. So this example, let's assume this person is under the age of 59 and a half and in a 15% tax bracket. We calculate zakah by multiplying $50,000 times 1 minus the penalty rate times 1 minus the tax rate by 2.5%. And this gives us the zakah due on the amount they would have in hand if they were to withdraw from their IRA account. Stocks held for the purpose of deriving an income, such as dividends, have an intent different from shares purchased for trade or appreciation. The zakah is not paid on the market value of the shares owned, but on the zakatable assets in the balance sheet allocated to the shares owned. In this case, we must look through to the underlying company's balance sheet. The portion of company assets which are used for income generation, such as capital, goods, properties, or equipment, are not zakatable. But other assets like cash or inventory, for example, are zakatable. So let's say a company has 80% in assets that are not zakatable and 20% that are zakatable. Any current debt and long-term financing of zakatable assets is subtracted from the zakatable assets, and this is then divided by the number of outstanding shares. We're then left with the zakah base, or zakatable assets per share. Now, there is a third category of stocks held for the purpose of appreciation, and these would be purchased without the intent of trade, but to buy and hold for their intrinsic growth. Similar to stocks intended for income, zakah is not paid on the market value of the shares owned, but on the zakatable assets in the balance sheet allocated to the shares owned. Now, we do understand that these calculations are not that simple, and it is one of the reasons why we calculate it for our clients at Azad. Now, moving on, let's talk a little bit about the eligible recipients of zakah. Here are the categories of people or the causes that can receive zakah according to the Quran. And many of us spend our working years saving and investing as we plan for life's big goals and retirement. And in our financial plan, we also have to remember that zakah is a calculation based on zakatable assets, not income. And as we accumulate assets, zakah as a percentage of wealth can also increase. And while this is a good problem to have, it's also important to plan for an increasing zakah as assets grow. Again, zakah is owed each lunar calendar, and while it can be prepaid, it shouldn't be delayed without valid reason. So it is important to plan for how you will pay your zakah in years when your income may be less. This kind of planning can also help us align the tax benefits of charitable giving to years when deductions are valuable and allow you to give more over your lifetime while paying less in taxes. Azad, alhamdulillah, is pleased to help our clients with tax-efficient ways to donate to charity. We'd like to mention the benefit of gifting long-term appreciated shares, as the charity receives the same economic benefit as the cash donation, but you, as the taxpayer, receives a tax deduction for the full market value of the gift, and importantly, avoid paying capital gains taxes on the gifted security. You could also consider creating a donor-advised fund to receive your charitable donations. Essentially, a donor advised fund is a charitable account to which you can make tax-deductible donations, and then you direct those funds to be donated to qualified charities of your choice without being restricted by tax-related deadlines. There are also charitable lead trusts, which is a special kind of trust that allows you to give money to charity while also giving you the opportunity to reduce income, estate, or gift taxes, or even transfer assets in a tax-efficient way. When you fund the trust, a percentage you determine will be donated to a charity each year. And at the end of the trust term, the balance returns to you or your family. And finally, a waqf can also be created to have a pool of investment capital for a charitable cause, generating returns and becoming a reliable and continuous source of income for a charitable cause. Alhamdulillah, we do have the Waqfi DAF program now, which does allow individuals to create a personal waqf that can enable them to leave a lasting legacy. So please talk with your Azad advisor to learn more about these options. Now, here's an example of a family who has accumulated $8 million before retirement, and they have a generous goal to give it all away. But of course, there's a competing factor. How can they ensure their own needs are met while amplifying the good that they can do? So creating a financial plan and utilizing tools like a donor advised fund, as I mentioned, giving to charity through an IRA called a qualified charitable distribution, can also allow this family to give almost $7.6 million over their remaining lives, save significantly in taxes, while still ensuring that they can continue to maintain their current living and healthcare expenses. And furthermore, these strategies can be used to pay zakat during retirement and also establish waqf, which again enables the grantor to protect principal and pays income to charities even after their passing. Now, before giving money to a charity, you do want to make sure the organization is legitimate and your donation will actually reach those in need. So there are some very helpful tools that I would recommend you consider using. One is the IRS Nonprofit Charities Database. They have a tool called the Exempt Organizations Select Check Tool. Now, this tool allows you to enter the name of an organization and see if the organization is tax exempt or not. And it is important to verify that an organization that claims to have a 501c3 tax exemption is actually exempt, because if the organization is not exempt, your donation will not be tax deductible. Secondly, Charity Navigator rates charities based on their financial health, accountability, and transparency to help donors make informed decisions about their contributions. Charity Navigator has actually evaluated thousands of tax-exempt charities. So if your chosen organization is not included in that list, you should try to find out why. And then there's GuideStar, which maintains information on 501c3 nonprofits. There you can actually find financial documents such as the 990, which is the organization's tax filing, and that can help you evaluate the legitimacy of an organization. That 990 is going to disclose to you where and how an organization's donations are spent, including the earnings of top officers, and all nonprofits are actually required to have an up-to-date 990 available to the public. So if an organization doesn't have this information readily available or is not forthcoming when you request it from them, you may want to reconsider that donation. Also, there are three main things to look at when evaluating a charity. So first, take a look at the charity's financial health. Again, with that 990 that the charity is required to submit to the IRS, you can take a look to see how much that organization spends on overhead. Try to find an organization that spends at least 70% of its funds on programs, not overhead. Next, you can also check for evidence of the charity's commitment to accountability and transparency. The best charities are going to be the ones that are transparent and accountable to the public. And you should be able to see evidence of this in the information they provide on their website. Can you find information about the charity staff and board of directors? Did the charity again publish financial information, such as its most recently filed Form 990 or audit? And lastly, you can investigate the charity's results. So, talking to the organization, learning about their accomplishments, goals, and challenges, again, either by looking at their website or talking to their staff directly, they should be able to tell you about the quality and depth of the results and not just their capacity to continue to get those results. And that becomes important when we're evaluating organizations. So it's now time for the Q&A portion of today's webinar. So thank you, Bashar, for joining us for the Q&A portion today. We have some great questions that have come in already. And so I'd like to start. We have one question that actually was emailed in to us. This one is asking, my question pertains to zakah on stocks. For long-term investors that are not actively buying and selling, how should the zakah be calculated?
So thank you, Fatima. So that the person who like buy and hold and not trading that these securities, that would be either one of the two categories that you spoke about, the one that considered to be for income, or the one considered to be buy and hold, what we call nama, where the looking for a appreciation, correct? So those, like, you don't pay the zakah on the market value. They are looked through assets. So you need to look at the balance sheet of those assets, securities that represent enterprise, and see what are zakatable assets there, like how much cash in hand they have, how much inventories for sale, if they have any other zakatable assets like gold and silver and maybe cattle and etc. So those, like, you pay the zakah, and usually the zakah, the zakah base of these assets usually less than the market value, So that's how you assess the zakah on those type of assets.
Okay. Next question that we got. How do I estimate the value of zakatable assets in a portfolio of many companies? So understandably, if you have one company, but how do you do it if you have many different companies in your portfolio?
So like for many different companies, again, like you need to know like what portion of these companies are deemed to be like urud tijara and what portion deemed to be as a buy and hold or for income, correct? And that again depends on the turnover. So the ones that you turn over more, and I think you can look at the portfolio that you have and see how much turnover, So a portion of it will be zakatable as urud tijara, correct, based on the market value. And another portion, there will be zakatable as a buy and hold, where you intend to derive an income or intend to benefit from the appreciation of these assets. If you don't do any turnover and you just buy and hold, and that's, those not deemed to be urud tijara, then the zakah will be based on the balance, the zakatable assets within the balance sheet of these.
Okay, thank you. And another question that we're getting, how do I know the value in portfolio that has remained for a whole year when there may be new money invested during the year at various times and the valuation is fluctuating? So I think this goes back to the question, the kind of the idea that we must hold the assets for one lunar year,
Right.
in order for it to be zakatable. And how does this apply to stocks? Because we may be buying and selling stocks throughout the year. So how do we determine what we've held in the portfolio for at least 1 year?
So what you do, you just look at the market value at the date of the howl, correct? And just look at the turnover ratio. Like if you turned the turnover, like if it's 50%, that means 50% of those would be deemed to be urud tijara. This is exactly what we adopted at Azad. Our Sharia Advisory Board adopted this, what we call distinction, and using an objective methodology rather than being subjective in it. Correct? And I think that would be actually fair for the zakah payers and also for the recipient of the zakah. I think that's probably the most objective methodology that you can utilize in the market, and it's being really adopted by many Islamic financial institutions. So those type of assets, like if you have a portfolio, again, you need, if whoever is managing that portfolio should be able to provide you with this. If it's really your personal one, then I think you need to do your own math and calculate it accordingly.
Okay. And also, I want to mention that for our clients, we have uploaded our Zakah statements to your portal. So that was just done today. So please take a look at your client portal to be able to access your Zakah and purification calculations for this year. Another question is coming in, can you pay your Zakah monthly? We mentioned earlier that oftentimes people like to pay their Zakah in Ramadan, but again, it's not required, it's not necessary. Can you pay your Zakah monthly? Can you pay it in lump sum? What can we do about our Zakah?
That's very, very good question and very practical one, because, as we go through the year, we attend many charitable events, fundraisings, and people, they may come to you during the year. Maybe certain events happen, like what happened, for example, during the time in the war in Gaza. There were so many opportunities, so you don't need really to wait for the month of Ramadan. You can be charitable all the year. And it was known from the time of the Prophet, peace be upon him, that his uncle Al-Abbas used to prepay for the zakah a year and 2 years and 3 years in advance. And that is really, possible here. You can prepay your zakah, and when the time comes for Ramadan, you keep record of it, and you can really, set the balance and find out, if you overpaid or if you underpaid, so you can make it up in Ramadan. So that's really, and also it's a very smart way to manage your charity. It's good to be charitable all the years, and you feel that you can really take action. So that's really a very smart way of managing your charity and your zakah.
Thank you, Bashar. So we have another question about, calculating zakah on retirement accounts. And again, retirement accounts can be pre-tax. They can have pre-tax money in them. They could be Roth, where they have post-tax money in them. So how should we go about calculating zakah on retirement accounts? Especially, does it make any difference whether you are taking an ongoing distribution from that account or not?
Yeah. So again, like retirement, depends on what type of retirement account. If it's really IRA, individual retirement accounts, those usually are zakatable, and you assess the zakah by looking at the base, reducing it. You look at the net asset value, for example, and again, you need to be very careful in categorizing which one of those assets are deemed to be urud tijara or urud income or appreciation. But you reduce the base by 10% and by any taxes. If you are younger than 59 and a half, you can add 10% to the tax rate that you are in, and you look at it as if you're to withdraw the whole money. So if it's really a big retirement account, it's going to push you to a higher tax bracket, correct? So it could really reach, for example, 37 plus whatever state. So you reduce it, and then if there is penalty, you add the penalty, and then you pay the zakah on the net. Now, if it's really above 59 and a half, and there is no penalties, so you don't really include the penalty in this.
Okay.
That's for the retirement.
Okay. And then again, we have another question that came in about, what do I pay the zakah? Do I pay it on the balance as of that year, or do I pay it on the gain? So I think we've answered that before. So just to
Yeah,
clarify, go
yeah,
ahead, sorry.
yeah. There is really like, again, as you mentioned earlier, we follow AOFI, the Accounting and Auditing Organization for Islamic Financial Institution, and also other zakah institutions like, the Fiqh of OIC, the Fiqh Council of OIC, the Kuwait Zakah House. These are really very highly um, recognized institutions with their expertise in the zakah, and they follow this. Like they look, for example, at these assets, like to be within these categories that we mentioned. The fact that you create a resemblance to other type of assets, they're not warranted. They call it sometimes, قياس فاسد or قياس مع الفارق. We stick to the consensus among the scholars, and even like scholars in the fiqh, in the jurisprudence, they argue what they call zakatul mali al-mustafad, and what you refer to it in your discussion, like how do you really assess the zakah when there is money to be added, and they talk in details about it. So what you just described in your presentation, Fatima, it's actually in line with the consensus of the scholars about how to assess the zakah. um, you know and again, you refer to something really important, like if there is a large sum of money added during the year, you're right, you can create what we call zakah lots, similar to what you do in tax lots, so to track exactly, to make sure that the money you added, you earned, correct, and that growth didn't uh, uh, it doesn't come from the principal itself. It's money that you added. You can create using a spreadsheet to track exactly the how for each lot of zakah. And, I usually recommend doing this if it's a really large amount of money and you want to be fair or precise. But if it's a small amount, it's not really worth to go through this headache, and you can just, look at the market value or the total assets at the date of the howl and pay the
Right.
zakah there.
Right. Because I think for most of us, that are contributing to 401ks, it's per pay period. So to track
Correct.
each pay period would be very tedious. So
Correct.
in that case, the better option is just to look at the market value as of the howl date that you've set. Okay.
Yeah.
All right. Thank
Correct.
you. Another question, which is a little bit more like, again, a practical question. I've inherited a piece of land and some stocks, and I'm just holding on to them, not knowing what to do yet. Do I owe a zakah on them? Should I pay zakah on them?
No, the land, again, that's not deemed to be urud tijara. Like one of the requirement for assets to be urud tijara, that you actually um, you bought it, you acquired it through purchase, with money, correct? And you intend to trade it at the time you acquire these assets. Now the land, unless you change your intention and you start buying and selling that land, that would make it urud tijara. But just inheriting that land, will not deem this to be urud tijara. The same for the stocks. Just be careful to make sure, because again, we talked about that category where you buy and hold for the purpose of deriving an income or for appreciation. Just look through to make sure that if there are any zakatable assets, cash or equivalent, that deemed to be liable for zakah, but not on the market value.
Okay. And there was also another question related to, again, I think the intent of purchasing a stock. If I buy a stock or investment in general, I might sell it based on the stock price or get a dividend. So again, the idea that we might purchase shares, for example, for mixed intentions. How do we address that?
So like we look at the action. Like if you have an intention, make sure that your action in line with the intention, correct? Because the action overrules sometimes the intention. So you can't just say, oh, my intention is to buy and hold, but I go sell it 50 times during the year. That would not really be, so it's better in this case to treat it as urud tijara.
Okay.
So like again, it's the person, it's a form of worship, and it's a the, between you and Allah Azza wa Jal. So you want to be like, honest and truthful, because, this is really um, uh, prescribed in the Quran, and may, that portion of money becomes, the share of the zakah recipients.
All right. And one more question on 401ks before we move on to a few other topics. What is a tax bracket that should be used when assessing zakah on 401k accounts? Is it the same bracket for income? And I think, Bashar, again, we often also get this question because 401k accounts are usually significant. So the idea that if you pull all your money out of your 401k,
Correct.
that may cause you to go into even a higher income tax bracket. Can you talk a little bit about the income tax bracket that we should use when determining zakah on 401ks?
Like just if you to withdraw that money, how much, like if you're to take it out, correct? Um, like again, now there is something called the RAT 401k, so you have to be careful, correct? So that's not taxable. So you need to segregate that. But if you take the money, the traditional 401k, if you're to withdraw that money, how much that will bring this to your tax bracket? You can check with your CPA and say, like, to test for you, because you already have an income. You make an estimate in this case. You make what we call khars. In this case, the khars, it's a method that is really known among jurists to rely on. So you can estimate like what's the tax bracket after this, and then again you subtract the any uh, the taxes, like whatever the tax rate, or you add to the tax bracket any penalty if they are due, and then you assess the zakah base, and then you multiply by 2.5%.
Okay.
That's how
So
you do it.
so if let's say you're in the 24% bracket, but you have $1 million IRA
Gonna push
or
you on the 37.
401k,
Yeah,
it'll
yeah.
push you into the 37% bracket. So
37
in the
plus
calculation,
the exactly plus the state, and
state,
depends on
correct.
the state you are in. Correct.
Yeah.
I think your CPA will be able to help you in this case if you have a significant amount, and it's really worth to consult with your CPA to help you at least in the tax bracket. Yeah.
Yeah. Okay. So we also have a question about purification. And again, on for our clients, you'll see on your Zakah statement, you'll also see, the purification that is there. And with the purification, this is money again that we never intended to benefit from. It's essentially giving away impermissible money that may have been earned on investments. It's not sadaqah, it's not zakah. And it's again intended just to rid yourself of that impure money. Now, one question is that as we were talking about earlier, that zakah is only paid on your pure money. So should you subtract purification before you pay zakah?
Yes, actually, when we do the calculations, we subtract it, correct? So just simply like, from any money that you have, you can pay the check for the purification and the zakah. So they're already calculated, ready to be paid.
Okay.
Because when we do the calculations just before we assess the zakah, we subtract actually any purification money. So your zakah, it's paid after we cleanse the purification in
Okay.
calculation, actually. Yeah.
And another question is asking about zakah on equity compensation. So, for example, in instances where people may earn, stock options, RSUs, they could have different cycle, points in the cycle where they are issued. They may be partially vested and they may be fully vested. How do we handle zakah on these types of assets?
Like, again, with the zakah, I think the main criteria you discussed, Fatima, is the complete ownership. So the fact that you have an option, that's not does not constitute a complete ownership. So there would be no zakah on the options that you own within your company or options of other companies, correct? Because the ownership is not complete. Now, the portion, usually you pay the zakah on the vested amount because it has to be settled. The ownership, not just to be complete, but also has to be settled. Make sure that you really, this is really finally decided that you're the owner. It's not going to be taken from you later on, correct? Or you lose it. For example, vesting usually based on your employment time, they will decide how much you actually own. So you remove the non-vested amount or the portion non-vested, and you don't really pay zakah because ownership is not complete in this case.
Okay. And another question, which is related somewhat to 401ks, especially for those who may not have a self-directed brokerage account option or halal investment options that they can choose from. How should they, what should they do when it comes to paying zakah on those types of accounts? Somebody mentioned, the thrift savings plan, which is offered by, often, for people that are employed by the government. Then they don't have control over the stocks that they can select. How should they deal with their zakah in that case?
They just pay the zakah on the halal portion, like of those securities. You need to figure it out. I know it's very complicated, but sometimes if they are invested in bonds or money market, they need to assess what's their principal. So they pay the zakah only on their principal.
Yeah.
The
And
other ones, they should really like strive hard now. More and more halal funds are available, and um, you know there will be no more excuses. Like you should really, it's proven itself, so you should really try hard to push for a halal uh, uh, funds or halal investment. There is no point to accept anything less than that, especially with now, alhamdulillah, we have many halal mutual funds available.
Yeah. And I would even add, again, if it is a retirement plan where you don't have full ownership, you can't withdraw money from the plan until you leave employment. Again, keep in mind that technically is not zakatable to you at that time, but when you do leave or you
Correct.
can withdraw money, at that time it becomes zakatable. If at that time you're able to roll it over, again, you can choose an IRA where you can invest it in a halal way. And again, that way it'll make things a lot easier for you when it comes time for zakat calculations as well.
Yeah, exactly.
Another question relating to the recipients of zakah: can zakah be given to family, or can that only be considered sadaqah?
In general, any family member that you're not obligated to support, you can give the zakah. Like, for example, um, your parents usually, if they are dependent on you, those you cannot really give them, you cannot count the zakat toward them, correct? Or your young children that you are obligated. But if they are capable of earning and they are poor, correct? Like, uh, your brother, your sister, even your children that, you uh, that they are adult, married, independent, capable of earning, but they are poor. Yeah, those can be given the zakah. But the one that is your responsibility to support, those you cannot really give them. from the zakah, the money, because that's your obligation.
Okay. And talking about charitable recipients, the charity that we give, we did mention earlier about donor advised funds as being a tool that you can use for planned giving. So again, working to align your charitable giving with your tax planning so that, let's say you want to make sure that you're saving for future zakat obligations, you can use a donor advised fund to put money into the fund, get an upfront tax deduction for that year, but use the donor advised fund as a source for your charitable giving in the future. So in this case, does the donor advised fund itself, the money that you've put into the fund and it grows within the fund, is that zakatable? And
Very
again,
good,
the question
very
is,
good
can that
question.
money be used for zakah?
So the donor advised fund is it's a vehicle, although it's designated as a charitable entity, but from a practical point of view, it's not a charity. Like it is a transitory structure where your charity will pass. It's kind of like organizer for your charity, correct? So what really distributed from it, that's what counts for the zakah. But the money that you send to it, that's not really the zakah money. You should be guaranteeing whatever gets into the hand of the poor, because what they say, the jurist said was zakatu tamlik, that you have whatever you enabled the recipient to own, that's what counts for the zakah. The money that you put there, it can grow, correct? It can grow. So that will actually, you can benefit from that growth to pay for the zakah. But what really counts is exactly the money that received by the recipient. That's what really counts for the zakah.
All right, thank you, Bashar, for joining. I know you were a little bit under the weather, so appreciate you still joining and helping us answer some of these questions on zakah. So would like to remind you all that all of our webinars are available on our website. If you go to azadasset.com, and you can actually watch them on demand, including this webinar, which will be recorded and shared there as well. We also have some upcoming webinars that you can check out. I would highly encourage you to join for our March webinar, which will be discussing shareholder advocacy. As Muslims, we talk about zakah, which is again one of our obligations to make sure that we are providing, giving charity from the assets that we have. But shareholder advocacy is another very important aspect for ensuring that we are using our money towards good. So please join for that one. And again, please check out our website, azadasset.com/webinars. Also, take a look at us and LinkedIn and join us on social media as well. On behalf of the entire Azad team, I wish all of you a beautiful Ramadan Mubarak. Please reach out to us if there's any other questions that we may assist you with. Thank you.